The US dollar is more than just currency. It's an instrument of geopolitical leverage. It's a global anchor. But here is the uncomfortable reality often overlooked in standard economics. The dollar's status as the world's reserve currency wasn't merely a triumph of the free market. It was solidified through strategic, high-stakes diplomacy arrangements that tethered global energy markets to American debt. This is the story of the Petrodollar System. It's the invisible framework of U.S. financial dominance, allowing the creation of liquidity while other nations face us. To understand the modern world, you have to understand how this system was engineered. To grasp the origins, we need to look back to 1944. At the Bretton Woods Conference, a broken world agreed to a new order. The US dollar would be the global standard, backed by gold at $35 an ounce. It was a system built on trust and tangible assets. But by the 1960s, the burden of the Vietnam War and domestic spending forced the U.S. to print more money than it had gold to back. In 1971, the breaking point arrived. President Richard Nixon suspended the gold standard. Overnight, the dollar became a fiat currency, backed only by faith in the U.S. government. The global financial system faced a potential collapse. If the dollar wasn't backed by gold, why would the world hoard it? Then came the energy crisis of 1973. Oil prices skyrocketed, and Washington saw a strategic opening. If the dollar could no longer be backed by gold, it would be backed by the world's most essential commodity. In 1974, the U.S. entered into critical negotiations with Saudi Arabia. The framework was pragmatic and transformative. The Saudis would price their oil exports exclusively in U.S. dollars. In exchange, the U.S. provided security guarantees and military hardware. This agreement created a powerful economic cycle. Countries needing oil had to acquire dollars first. This generated perpetual, artificial demand for the U.S. currency. Furthermore, the massive profits the petrodollars earned by oil producers were recycled back into U.S. assets, specifically Treasury bonds. This allowed the U.S. to finance massive deficits and maintain low interest rates, funded effectively by the global energy trade. This system turned the global economy into a machine that fed American financial markets. Developing nations borrowed these recycled petrodollars to industrialize. However, when U.S. interest rates rose in the early 1980s to combat inflation, the cost of this debt exploded. The resulting crisis in Latin America led to a lost decade of austerity. This dynamic highlighted a stark reality. The system privatized gains in financial hubs while socializing risks in the developing world. The dollar had become a mechanism of immense influence out France. As finance minister once termed an exorbitant privilege, the dominance of the petrodollar has not gone unchallenged. Historical observers note a pattern. Nations that attempted to bypass the dollar in energy trade often faced severe geopolitical consequences. In 2000, Iraq proposed selling oil in euros. By 2003, the country was at war. Later, Libya floated the idea of a gold-backed African currency for oil trade, shortly before the fall of the Gaddafi regime, while official narratives cited security and human rights. Economic analysts have long debated the role of currency dominance in these conflicts. The message perceived by the world was clear. The dollar-energy nexus is a red line. For 50 years, this arrangement seemed invincible. But history is never static. Today, structural shifts are visible. Major economies like China are settling energy trades in yuan. Russia, isolated by sanctions, has pivoted to non-dollar payments. Even traditional partners in the Gulf are diversifying their alliances. These moves represent a gradual erosion, not an overnight collapse, of the monopoly established in 1974. If oil is no longer exclusively priced in dollars, the automatic global demand for U.S. debt weakens. For an economy accustomed to low-cost borrowing, this presents a fundamental challenge. The era of the petrodollar shaped the late 20th century, influencing inflation, war, and wealth distribution. But as we move deeper into a multipolar world, that foundation is trembling. Money is rarely neutral. It is political. The deals struck in the quiet rooms of 1974 defined your economic reality for decades. But as new powers rise, the old contracts are being rewritten. History shows that no monetary empire lasts forever. Understanding the shift is the key to navigating the future. If you want to understand the forces truly moving your money, hit subscribe. We explore the history they don't teach in school.